Good afternoon, traders and investors. Will back here with another one. Hope everybody's doing good after a Wednesday market session. So in today's session, guys, the market's pushed higher once again. However, things are looking a little bit toppish. So we're going to take a look at exactly how our major indexes are holding up. Take a look at our major tech names as well. And we do have two earnings for you on the day today. Tesla with a potential earnings disaster. We're going to take a look at their numbers. And also ASML, one of your leading semiconductor manufacturers in the world. They manufacture large equipment which aids in the production of the actual semiconductor chips. So we're going to take a look at their earnings and see how they are doing in a minute. So without further ado, guys, let's get into today's video. So SPY up 0.11%, QQ leading on the day once again here, 0.55% here, but it was a fairly mixed market as a whole. And you take a look at the heat map, you can see that even better. So yesterday and the past few days, we really had decent broad market performance, but today as a whole, the market more than not names coming down. So you can see that mostly big tech was your leader on the day. Semiconductors having a very good day as well, but a lot of red in the market. So is the market breadth thinning out a little bit? You definitely could think so in terms of these charts. And when we take a look at the technicals, I'll also show you that on the short-term timeframes, we may just be nearing a local top for the markets. On the one-day relative performance, you can see here on the day that everything was fairly balanced. Energy, communication services, technologies, and financials up, but a lot of red nonetheless on the markets, which was voiced by our previous heat map on display. So with that being said, guys, before getting into the technicals, we are going to cover a little bit of earnings, and let's start off with Tesla. So what exactly happened with Tesla? Tesla was actually down on the day, and in the after hours, after their earnings, they went down an additional 6%, now ending under your $200 psychological level. So what exactly happened on the earnings? Let's get into that right away. Earnings, EPS, ever so slight miss here by 2 pennies on the actual EPS for the quarter, coming in at under 3% on the loss. And in terms of revenue, you did see that they did have a ever so slight miss on revenue as well. However, everything wasn't actually bad in the report. And we're going to take a detailed look at the report to see exactly the good and the bad. So here you go with the headline. Tesla shares drop almost 6% on earnings miss and warning of volume growth decline this year. Tesla reported revenue growth of 3% in the fourth quarter, trailing the estimates. Auto revenue increased just 1% from a year earlier. And here's the kicker. Vehicle volume growth in 2024 may be notably lower than last year's growth rate, the company warned. So in previous years, the company has been benefiting from a growth rate in terms of vehicle production of over 50% a year. That has now been tapered back to about 35%. So the company, even though they are growing, they're growing at a less fast rate than before. Now, let's take a look at the gist of things. So total revenue increased 3% from 24.3 billion a year earlier. Operating margin, which was one of the things we were looking at for on the channel that we've been talking about, guys, is this quarter was all going to be about EPS and operating margin. And we know because they've been doing significant price cuts over the course of the year because of how high interest rates are, they're trying to stimulate demand. Operating margin was going to be front and center. So you can see here, operating margin came in at 8.2%, down from the year ago's quarter of 16%. So in 1 year, cutting their net operating margin almost in half and slightly higher than 7.6% in the prior quarter. So quarter over quarter, it did have a slight increase here, but really low across the whole year. Now, meager growth in auto revenue was partly due to a reduced average selling price following steep price cuts around the world in the second half of the year, which we talked about on the channel. And let's take a look at the investor presentation to see the good items and the bad items. So leading into this, guys, we were saying that it was all going to be about management's guidance, the EPS, and the margins for the quarter. Obviously, Tesla in a very cyclical business, really getting plagued by higher interest rates. Now, I still do believe that once interest rates come down, you will recapture a lot of this lost margin and a lot of the lost EPS. So we're just going to have to wait for rates to come down for Tesla share price to be benefiting from that in terms of margin and EPS expansion. But as a whole, here's the good things, guys. The company is still doing exactly what it does best. It's producing vehicles, reducing the average cost that it costs them to produce each vehicle, and really expanding its network beautifully. So there are some good points. Even though Tesla is caught in a bit of cyclicality with interest rates, it is still doing what it does best. It is still growing, and that is the moral of the story. So here's your profitability figure here. $8.9 billion in operating income in 2023. 2.1 billion in Q4. That's a very, very good number here. In terms of cash, great cash flow, guys. This is one of the highlights that I'm going to bring to you guys later in the report. Is their cash flow is very, very good. So operating cash flow is 13.3 billion, free cash flow of 4.4 billion in 2023. Their total free cash flow, you'll see, is almost at $29 billion. So they do have a lot of cash on hand. Very good cushion by Tesla. And in terms of operations, the Model Y became the best-selling vehicle in the world. Energy storage deployment also of 14.7 gigawatts per hour in 2023, which is 125% growth year over year in their energy deployment. So these are very, very good things, guys, right? 2023, we delivered over 1.2 million Model Ys, making it the best-selling vehicle of any kind globally. Very, very, very good. So let's go down right here and we're going to get into the quarter over quarter and year over year comparison. So I just want to do this for Tesla. I don't usually get into the balance sheet for other company earnings, but since Tesla has been such on a decline as of recently in terms of share price, we really need to analyze together exactly why that is the case and if there is still some good underlying factors at play here, which there are. So you'll see here on a quarter over quarter basis, look, quarter over quarter increase in automotive revenues, yes, only by 1%. Increase in energy generation and storage revenue, good though, 10% in a year over year comparison, down quarter over quarter, but year over year still performing well. And services and other revenue was up 27% year over year. You can see that came in line exactly with last quarter as well. So total revenues as a whole, all of these revenue segments was up 3% year over year. And if you take a look down here, guys, this is the number that I want to bring your attention to, their free cash flow. So free cash flow increasing $2 billion on the quarter for a total free cash flow on their balance sheet of $29 billion. So they still have a lot of money, guys, and the capital expenditures for the future are not that many. They've mostly got most of their big factories up and running as of now. Only Giga Mexico remains in the pipeline. So this is why it's been very good for them to build a large buffer of free cash flow, which is a very good metric in terms of their balance sheet. Now, if you take a look at the year-over-year comparisons here, this is the year-over-year financial summary, right? So you can see total automotive revenues were up 15% to $82 billion in 2023. So still growing very well. Energy generation and storage revenue, this is the kicker here, guys, up 54% year over year, up to $6 billion. You can see very nice growth year over year over the last few years. And even their services and other revenue jumped significantly in 2023, up to $8.3 billion. So really doing a good job of broadening their revenue streams. Now, total revenues, $96 billion. This is crazy, guys. For the years, they almost brought in $100 billion of revenue, still increasing total revenues 20% year over year. Now, they did have a little bit of guidance that was saying that 2024, they were still going to grow, although at a lower than expected pace in terms of previous years. But I still want to see them grow revenue on a year over year basis of roughly 18 to 22% would be very good. Their EPS growth year over year should remain above 20%. So that's that 20 and 20 rule. If the company is still growing revenues and EPS by 20% year over year, it means that the company is still healthy. It is still a healthy growth company. Now, Tesla, obviously the main factor is going to be interest rates. As soon as interest rates come back, I do believe that we'll get back a lot of your margin in turn. Now, in the 2023 year over year, you can see their margin, their operating margin, just over 9% as a whole, but significantly down still from their significant rises in 2021 and 2022. So that's a little bit of a negative effect right there. But once again, I do want to just say that their EPS has been growing here at roughly about 20% per year. So as long as you see 20 and 20 EPS and revenue, it is fairly healthy. And here are the factors that they attributed, guys, to the pluses and minuses of the quarter, which we basically covered on the channel already. Let me move myself over, but just reiterating that this is what we were looking for, and this is exactly what has benefited and both plagued them at the same time. So positives in revenue, growth in vehicle deliveries we saw, growth in other parts of the business we saw, but reduced vehicle average selling price, right? So this is because of interest rates being high. They had to do a lot of price cuts, both in Europe, America, and China as well. And then you also had lower FSD recognition, which they also had decreases in the price of FSD earlier in the year in about April or May, if I recall correctly. In terms of profitability, reduced profitability, right, due to the average selling price, increase in operating expenses, partly driven by AI and other R&D products, lower FSD revenue recognition, cost of the Cybertruck production ramp. Now, Elon Musk was fairly bullish on the call, although they didn't give guidance, guys. This is one of the few quarters that Tesla has not given guidance in terms of what they expect for deliveries for the next year, but also what they're supposed to deliver in terms of their new product, the Cybertruck. So they said that they could maintain a capacity of roughly 125,000 Cybertrucks for the year, but they failed to say if they were going to actually hit that target over 2024 or not. So we did have some pluses here on the profitability side, lower cost per vehicle, including lower raw material costs. This is mostly in terms of the price of lithium having come down a lot. You had growth in vehicle deliveries and gross profit growth in energy generation and storage. And obviously down here, you have your big kicker, which is the free cash flow. That is the main event here in the earnings that I was very happy about, was their growth in free cash flow. So take a look here, guys, right down here. You will see that Tesla is growing in terms of their FSD. Look at this. This is pretty much cumulative miles driven with FSD beta in terms of the millions. Now, ramp is getting quite significant as more people are using FSD as they acquire more data. This is what you love to see. This is going to allow them to improve the software even more. So many millions of miles driven, almost 800 million miles driven in terms of FSD. So I expect the FSD ramp will continue, and they will be able to refine the product over the next 2 years and hopefully be able to license the product to other car manufacturers as well. And this was another highlight on the earnings, guys. They're now, the cost of goods sold per vehicle has been coming significantly down over the course of the year. You can see as of last year, their cost of production per vehicle was roughly around the 39,500 mark. And now they've brought it down almost 10% all the way down to 36,000. So very good cost of production decline. This is due to two factors: raw materials inputs, such as the price of lithium coming down. They also have negotiated very attractive deals with their suppliers as they ramp up to scale. They obviously get better pricing with their suppliers, so that's been helping. And number two, it's just their production, their production capacity. What have they done to improve their production capacity? We're talking about the developments of AI and robotics, which significantly helps them in their production processes, using less parts and whatnot. So all that combined has been combined in bringing your cost of goods sold per vehicle significantly down. And now two other really net benefits to the company is in terms of their energy storage business. Look at how much energy storage deployment they were able to do in 2023. So really starting the ramp of their energy storage business as well. And in terms of services and other businesses, you can see that it used to be a loss leader in the company, but now turning profitable in the last 2 years. So very happy to see that both of these things are going in the right direction. So that's pretty much everything we had for your Tesla earnings. As you can see, guys, couple bits of negative, couple bits of positive, but as a whole, I really think that this is going to be a story of interest rates as a whole. So I don't believe the stock is in for tremendous rallies and whatnot until interest rates come down. However, they have been doing a very good job of managing the current situation with the cards that they have been dealt. So all in all, Tesla's doing a good job with what it can right now, but unfortunately, what it can't do is decrease interest rates. That needs to come from the Fed, and I do believe that when that comes, Tesla's share price should be able to appreciate significantly, not just because of the fact that rates are coming down, but because of how it translates into their margin and EPS, which are really the focal points of Wall Street at the current time. Now, moving into our second company earnings, semiconductor business, guys, ASML. And if you don't know what ASML does, as I said in the introduction of the video, they make $200 million machines that help produce semiconductors in terms of setting together the semiconductor chips, the layouts of the chips and the circuitry in the chips. So they manufacture very large scale machines that a lot of big manufacturers such as Samsung and TSM, whose earnings we just covered last week, use in their production process. They are the industry leader in terms of machinery for this. They only have a few other competitors. Lam Research is one of them. And the other one is Applied Materials right here, AMAT. But in all, they are the market leader in terms of the production of those machines. And in terms of their earnings were very, very good here today, guys. So let's get a gist of their earnings. Earnings, EPS up 10 6%. Revenue up 6.2%. Very, very good. The stock is now approaching the all-time highs, right? I really liked ASML back when it was trading roughly in the lower $600 range, but now at about $847, it is getting a little bit rich for me, especially given their guidance that they just gave for the next year, which is said to be in line with 2023. So no real growth in 2024. However, they do expect very good things for 2025, and you can see it down here. TradingView has done a great job of including it already in the forecast, right? In the forecast down here. So you'll see that 2024, EPS roughly going to be in line with what we just got in 2023. But here's the expansion. The mega expansion comes in 2025. Jump of 30% EPS from 24 to 25. So going to have to be a little bit patient on this, which is why I say the stock little bit high for me in terms of 2024 pricing. It's decent for 2025, but I like to get a little bit more of a dip personally myself. And in terms of revenue, you can see that the revenue for 2024 should be fairly flat in relation to 2023, but after that, 2025, 6 and 7 will continue to generate a significant gain. So here's the headlines. Critical chip firm ASML posts 30% surge in full year revenue, but signals slowdown in 2024. And TSM touched ever so slightly on this on their earnings last week, guys, where they were talking about the semiconductor industry. Even though share prices have been going to the absolute moon, the actual semiconductor industry is in a little bit of cyclicality right now. They went like this 2022, 2023, and now 2024 going to have a little bit of a dip before 25 and 26 really starting to ramp up again. And ASML was saying exactly what TSM said in that respect as well. So here we go. ASML beat market expectations on revenue and profit, but said it expects sales for this year to be flat versus 2023. Now, they did get hit a little bit by China in terms of the restrictions, right? So you guys know that the US has put a lot of restrictions in terms of sales to semiconductor technology towards China, and China is one of ASML's largest clients. And some of these restrictions, this is a company out of the Netherlands, and most of the Eurozone has adopted the same regulations as the US has in terms of exports of semi-technology towards China. And this has hurt their business a little bit. It represents 15% of their entire sales volume, and because of those restrictions, they're unfortunately not able to export as much as they would like towards China. But all in all, very decent quarter by ASML, and we'll take a look at their slides here in a few. So in terms of net sales, 7.2 billion euros versus the 6.9 expected, so beat in terms of sales and beat in terms of profit, over $2 billion in profit versus the 1.86 billion euro expected. And gross margins were the story of the company. If you see right down here, guys, right? So in terms of profit, revenue expansion, but the profit of this company is absolutely ridiculous. 2023 ending right down here, bottom right corner, 28.44% net margins. And this is a company producing equipment, right? So very nice to see a manufacturer with such high margins that you usually only see in terms of service companies. And TSM is the same thing. We were talking about how their margins were absolutely phenomenal. So semiconductors industry as a whole with very, very high margins, high free cash flow business as well. Take a look at their financials. Company is set up extremely well. You can see that in terms of their 2023 year end, we do have very decent free cash flow. This company has never had problems with long-term debt. They don't have problems in terms of 2023 either. High free cash flow, 3.5 billion, and bringing in over 7.74 billion in cash equivalents, which they do use for dividends, but they also use for share buybacks. Very good quarter. Company is extremely solid balance sheet, just a little bit of a pullback maybe for 2024. And you'll see this right here. So market expectations remain unchanged, around 1 trillion in sales by 2030 for the total semiconductor industry. This is similar to the chart that I presented you guys when we did the TSM earnings just last week. And now take a look, just a few more slides that I want to present to you. This is actually the machinery that they make. So you can see this is very large machine, ASML machine, which is used to manufacture the semiconductor chips themselves. You can see the size of the machine. It's absolutely massive. Each one of these machines costs $200 million. So it generates them a lot of sales. Keep in mind, ASML, they came out with full year revenue. Full year revenue is posted right down here. Full year revenue about $30 billion. in their pipeline for 2024, they have about $38 billion in orders outstanding. So over 1 year of revenue outstanding still to be produced. Very, very good metric for them as well. Take a look at their margins. Margins have been very, very good as well over the course of Q4 2023. Operating margin 33%. Net income as a percentage of sales still high, 28.3%. So very beautiful margins for ASML as a whole. If you take a look, very nice revenue expansion across all lines of their business. 3 lines of business, memory, logic, and installed base management, as they say. Very nice revenue expansion sheet. I showed you that on TradingView. Should be relatively flat in 24, but then 25, 26, 27, back to the uptick. And the last slide that I wanted to present to you guys is, what are they doing with that free cash flow? Well, they are paying dividends, as you can see right down here on this graph to the left. Dividends paid increasing always so steadily over the past roughly 10 years. And here's your cumulative capital return. You can see that most of what they do with the free cash flow is not dividends, it's actually share buybacks. And the share buybacks are going to continue through 2024 as the company believes that it is one of the best ways to deliver shareholder returns. So ASML, quick recap. I love the company, but the price right now is getting a little bit stretched considering that their guidance for 2024 was relatively flat. So if I can catch this company on a dip back in anything with a 7 handle, I may be tempted to add a little bit more shares for the long-term portfolio, but no reason that this company can't continue to grow over the next 2-3 years. It is one of your industry leaders, one of my favorite technology companies in semiconductors as a whole. My favorite 4 semiconductor plays, guys, if you want to write this down. Number 1, NVIDIA. Number 2, AMD. Number 3, ASML. And number 4, TSMC. So those are the top 4 picks for semiconductors for me for the next couple of years. ASML, the machines that make the chips. TSM, the company that makes the chips. And then AMD and NVIDIA, the companies that are best suited to use the chips. So that's pretty much all I had for you guys for earnings. Now let's get right into your technical analysis, and then let's do tech companies and then my portfolio. So as a whole, SPY here on the day, gap up open into some profit taking. And the reason I say the market's looking a little bit toppish here, guys, getting a tiny bit overbought here on the RSI, but also on the 1 hour time frame, you can see that now the bears with today's movement, they've really cut the hourly time frames, right? So we were looking for, when will this move be topped out? Well, you need to look at the lower time frames here when they lose the hourly trend. And now they lost the higher low with the higher low put in over the course of the morning. And now the bears have created a lower low. So if we do end up into an hourly downtrend into tomorrow or Friday's trading, that will mean that your top is set. And then we're just going to be looking for a daily higher low, anything above 469.37, looking for a daily higher low, but very decent chart as a whole, guys. This chart will be moved a lot over the course of next week with major tech earnings. And also Jerome Powell on next Wednesday coming out with an interest rate decision and potentially some guidance for rate cuts for the remainder of the year. So that will be the bigger week. So it may be just a time for the markets to pull back in the expectation of more data next week. But all in all, bulls still in full control, still in a daily uptrend, still looking for your higher low. Keep an eye, your previous all-time high at around 480 should be providing some short-term support with your daily 12 EMA right down there as well. And weekly uptrend just remains confirmed. So if ever we lose the daily uptrend into tech earnings and Jerome Powell next week, that's okay. Weekly bulls have a lot of space to give back. 466.81, any pullback on the weekly, just a weekly higher low for further trend continuation. Markets still looking very healthy. QQQ, same principle, right? So little bit of a gap up open into profit taking. So we look at the lower time frames and you will see losing the hourly higher lows with the low that was previously set right at the open. Bulls really losing that over the course of the day. So if you do get an hourly downtrend into tomorrow, perhaps, that means your daily move is topped out. Obviously for SPY and QQQ, if we just recapture your daily uptrend, that means that your daily move has just not topped out and the bulls would create even more space for the higher low, right? Even more space from the low to set up for the eventual higher low for further trend continuation. But if ever we lose this hourly trend into tomorrow, you'll know that daily consolidation is underway. At that point, keep an eye, 413 previous resistance right here is going to be the current area of support that we will be targeting. All in all, daily bulls still in control of this beautiful daily uptrend. Any pullback, anything above 403.33, just looking for a higher low for further trend continuation. The weekly is looking gorgeous as well, right? So Nice, beautiful weekly uptrend. Any pullback on the weekly at this point, just for a higher low above 396. So bulls with tons of space. You even have your previous all-time high areas down at around the 405 region. So if ever the bulls do pull back, first line, 413, and then you really fall back into our all-time high zone, 400, all the way up to 405 is going to be a very juicy area for the bulls to build a base of support. But as of now, no signs of slowing down yet. Watch those lower time frames, and then next week, Big Tech and Jerome Powell will be the kicker for these markets. But as a whole, bulls looking healthy, tons of space created off of the lower lows, and tons of space created off of your weekly lows as well. So everything looking fairly decent, although looking a little bit toppish in the short term. Now, moving on to XLF financials, same principle, gap up open into a little bit of profit taking. So keep an eye on your hourly trend. Bulls not losing the hourly trend just yet, but the bears pulling back very, very decently. So we'll see if this develops into an hourly downtrend tomorrow. That means your daily move higher will just have been topping out. At that point, we're just looking for a daily low, daily higher low. Bulls creating a ton of space off this low to potentially set the higher low for further trend continuation. Financials looking very good through most of their earnings season, and I did not see any red flags. $38 all the way down to about $37.50. Previous area of resistance right here should be acting as a decent level of support. You also have your moving averages right there. So I do expect the bulls to be able to base a little bit of a bounce going from there. We'll see if they can keep the daily uptrend going. If ever we lose the daily uptrend here, guys, well, we're just going to be looking for a weekly consolidation. But at this point, the bulls looking extremely healthy, guys. We got the weekly higher low. We're on to leg number 2 of weekly uptrend right here. And no signs just yet, unlike SPY and QQQ, who are in jeopardy of losing the hourly uptrend. Financials still with a ton of space here to recover it. If ever QQQ bulls take a couple days off, financials are fairly poised here to recover in terms of being able to continue the rotation and can keep markets, especially SPY, healthy. Now moving on to healthcare. Healthcare, a little bit of a drop here today, but that's what we were expecting after yesterday's video, right? So daily uptrend. They lost the lows, so daily uptrend was lost. Then we were maybe expecting a lower high into potentially lower low continuation for a daily downtrend. XLV now coming down here, so lower high is set, 140.73. We will see, can the bulls protect the double bottom, or will we be heading to daily downtrend into lower lows? Daily downtrend, that would be fine. It would just be for a couple more weeks of potential weekly consolidation. And weekly consolidation is very healthy, anything above 122.65, looking for a weekly higher low. Keep an eye this level right here, 137 down to about 133 is your sweet spot, been previous resistance for a while, which is now should be acting as support. Your moving averages are there as well. Healthcare chart looking very healthy in terms of the long-term, guys. Long-term bulls are in full control at this point, right? Monthly breakout is started, just struggling with your previous all-time highs right around that 142 mark, but currently looking decent, even though the short-term timeframes are being challenged by your bears right now. And lastly, IWM Russell, not doing too well on the day here, guys. So why? Well, yields had a little bit of an uptick today as well. So a lot of growth stocks, a lot of interest rate cyclical stocks as well. We're not having the best day as of today. Yields, this is a 20-year yields, daily uptrend continues. But as I've been saying, guys, even though it's a daily uptrend, which was sparked, right, which was sparked off the lows right here of about 4.1, now back up to about 4.5. These are still way too high for 20-year expectations, in my opinion. We are just looking for a weekly lower high for lower low continuation. And in terms of the size of the bounce on the weekly right now, not that sizable of a bounce, right? The bulls still have the bears, they haven't put in too much of a move yet, not even getting up to about 38%. What you don't want to see is them get all the way as high as about the 618 level. That will be 4.9. I don't necessarily see that. We'll see what Jerome Powell says over the course of next week, but rate cuts are coming this year. And when rate cuts do come, guys, this chart should be falling like a rock down into the 4%, even sub 4% for 20-year. And 10-year yields should be just the same. They should be falling as well. You can see here, weekly move, just looking for a weekly lower high for a weekly lower low continuation. I do think we're well past the peak in yields, but it has been plaguing growth stocks over the course of the week. Haven't been having a very good time, despite rallying with the rest of the market into the early week, now pulling back ever so slightly. But Russell looking fairly decent, guys. We were looking for the engulfing move, right? It was a daily downtrend. Now you got your engulfing move, engulfing your previous lower high. The bulls have created enough space to potentially set a daily higher low and maybe resume into a daily uptrend. I do think that this is going to be heavily reliant, guys, on the meeting 31st of January, next Wednesday. So next Wednesday could either just recapture this to the bears or could set us up for a nice daily uptrend reversal if we get some dovish comments by Fed Jerome Powell next week. So we'll see how it goes. Bulls set up nicely here for a potential shot at a daily trend change. But if they fail it and bears recapture, it'll just be continued weekly consolidation. And at that point, guys, my target remains the same. 186 down to about 180 is my target midpoint of the range. And I will be buying some Russell shares if we do dip back into this zone right here. But all in all, bulls looking healthy on the short term. They've created the space. Now can they capitalize and create the daily uptrend? I'm looking for a daily higher low for a starter position, but if ever we roll over, it's not going to be a big position if I do position off of this daily higher low attempt right now. But if ever we roll over lower, that's where I'll be looking to average most of my shares, 186 down to about 180. And now lastly, our Dow Jones. Dow Jones pulling back on the day here, 0.26% to the downside. So after bulls put in an engulfing move to the upside, recapturing the ability to set a daily higher low for daily higher high. We are just looking at right now for daily consolidation, right? So Dow Jones losing the hourly time frames. You can see that. That's why I say, guys, how do you know daily consolidation is underway? Loss of your hourly time frame. So now daily consolidation being underway, looking for a daily higher low, anything above 37,150-ish, should just be looking for a higher low for potential trend continuation. Big area of resistance in the past should now be acting as support for the stock. So this whole 37,600 down to about 37,400-ish range should be a good area of support. But if ever we break through this, guys, well, we'll still just be in a little bit of weekly consolidation at the tops here. Dow Jones still looking very healthy in the grand scheme of things, guys. Monthly breakout is substantial at this point, right? And we do have the previous all-time highs to just come back and use as support if ever we start re-challenging these lower levels into next week. Potentially big tech or Jerome Powell's comments could maybe send us down there. But as a whole, bulls still in control, still looking for the higher low for potential trend continuation. And if we do get trend continuation, guys, all big tech earnings are good and Jerome Powell is dovish, well, you just know that the bulls never really lost the higher time frames either. So continuation is just expected at this point. It's up to the bears to prove to the bulls that they want it more at this point, right? Now let's get into big tech. Not much has changed on big tech. A lot of earnings coming up next week. So we'll go through these quickly as well, then get to my portfolio. So Apple, after a significant rise, now potentially starting to cool off here on the daily. You can see when is the move going to be topped out on the daily? Soon as they lose the hourly trend, right? Now the hourly trend has been lost, flushing your lows, 194.70 region, flushing those lows. Now, if the bear set up hourly downtrend into tomorrow, daily move is topped out and we're into daily consolidation. Healthy though, Apple's put in a ton of space. Daily uptrend right now, just looking for a daily higher low, anything above 180.24, daily higher low for daily trend continuation at this point. Earnings is going to be the big kicker, comes in terms of next Thursday. So I do expect if we do get a pullback, guys, I'm looking before earnings, maybe the 190 region where we do have our two moving averages right now. And this whole region was previous support for the stock all the way back here as well. So it should be continuing in that same line right here. Let's just call it around the 189 area right there. Is going to be a very juicy area of support for Apple bulls. Apple bulls with tons of space to set the daily higher low and even on their way to creating enough space for a potential recapture of a weekly uptrend into Q2, Q3 for Apple. Apple looking very good, but I don't believe we're going to break all-time highs here before earnings. Earnings is going to have to be really bullish for them to break all-time highs too. But as of now, everything looking good. If ever earnings are bad, well, if we get back to my zone right here, 181 to 175, you guys know the drill. That's the buying zone. Why? Because it's just a nice area of monthly consolidation, lower area of the monthly consolidation range. Similar to back here, when Apple puts in a consolidation range at the top of a move, usually represents a decent buying opportunity. And nothing's wrong with the business, just short-term catalysts. Now AMD guys up 6%. So AMD a new all-time high, cracking the 180s on the day today. So beautiful daily uptrend, right? No red flags whatsoever. Daily higher low was what we were expecting after the move topped out. It topped out, set the daily higher low, and once again in just one day, you can see this, guys, right? Daily higher low set, only about a couple days of trading. Now once again, daily higher low is set, only 2 days of pullback, new daily higher high. So daily uptrend very healthy. As soon as this new move tops out, keep an eye out, guys, for a daily higher low, anything above 164, just for a daily higher low for further trend continuation. But little bit overbought. But you can see, guys, AMD has been overbought since pretty much at this point, well, you know, on and off, but has been overbought pretty much since the lower 140s, right? 138 before putting in new higher highs and new higher highs. Now it's getting a little bit juiced to the upside, and you can see it best on the weekly because now even the weekly time frame is severely overbought after the last couple of weeks of movement right here. So weekly still in a beautiful uptrend at this point. So whenever this daily move tops out, let's say the bears set a daily downtrend in the next couple of weeks, that's just fine. So much space on the weekly, guys. Anything above 134.17. Just looking for weekly higher low for further trend continuation. At this point, the previous all-time highs is going to be your support. We're talking about 157-ish all the way up to your 165 area. Should be the next area that we're looking for a pullback on AMD whenever this move tops out. If it tops out shortly, this is where I would be targeting as a whole. Now moving on to Amazon. Amazon looking fairly good, guys, on the day. Amazon with a new 52-week high on the day before pulling back ever so slightly. So we were watching this tightening range right here was looking like a bull flag, right? Very decent bull flag right here. And now we get break up to the upside. So looking very, very good on Amazon indeed. Amazon with earnings next Thursday. So we'll see how they do on that. But I do expect this to be a year of efficiency for Amazon, regaining of more margins, regaining of more cash flow. So it should be a very good year for them as a whole. After 2021-22, they were hit with a lot of capital expenditures, a lot of new warehouses and whatnot, and their profits kind of dwindled back into negativity. I do believe this should be a very good year in terms of profitability for Amazon. At this point, guys, daily uptrend is just continuing. So any pullback at this point, looking for a daily higher low above 150. So bulls with a lot of space now. And now since we're above this whole region right here, this whole 153, 154, that should be providing an area of good support in terms of your first pullback there. The moving averages are here as well, talking about this 12 EMA, 12 yellow line right about 154. So 153, 154, short-term support. But if ever over the course of next week, let's say their earnings are bad and we really start taking back a lot of this move here, well, the bulls, tons of space on the weekly, anything above 144.28, just for a weekly higher low for further trend continuation. And this is my sweet spot, guys. You can see this spot between these two yellow lines has acted as many areas of congestion, support all the way back here, resistance, and now support. So we're talking about 148 down to about 140. If we get into that zone, it's a big buy zone for Amazon for me. But for now, weekly uptrend maintained by the bulls. Now moving on to Google. And you know, every time we hit Google, I have to take a sip of the coffee, right? So Google, very decent day on Google as well. New 52-week high, and now really breaking up to the upside. Upside target for Google, guys, has to be your previous all-time highs at this point, right? So 152, let's call it. It's going to be your previous all-time highs. Not there yet. Struggling a little bit with resistance at this current level, but daily uptrend is absolutely gorgeous on Google at this point. So whenever this move tops out, whenever we get a loss of the hourly uptrend, you can see no loss of the hourly uptrend. Hourly move. The bears had the shot to set up the lower high for lower low, but never had it happen. The bulls just recaptured the hourly uptrend in their faces. So no real hourly downtrend being set. Hourly uptrend just continues at this point. So your daily move just persists higher. For the move to be over, we need to have a consolidation, a real loss of the hourly time frame. Not talking about one hourly move down, which loses the hourly, but doesn't set the downtrend on the hourly. We need to set the downtrend on the hourly for your daily move to be finished. At this point, once that move does top out, anything above 140.55, just looking for a daily higher low for further trend continuation. Google should have a very good year. Earnings next Tuesday as well. So we'll be very surprised to see a lot of major price action on Google before earnings. Obviously, if earnings are bullish, we are going to go past the all-time highs, no questions asked. And if earnings are bearish for any which reason, guys, I am expecting a little bit of a retest down here. Okay, so this level that I'm looking out for, 140 down to 138. If earnings are really bad for some reason, and that's a ways away for Google right now, we're talking about 5-6% at this point. But still, if you do get back down there, big buy zone for me on Google, 140 to about 138. Everything's looking gorgeous on the weekly uptrend confirmed. And any pullback, guys, if earnings are bad, anything above 137, just looking for your weekly higher low for further trend continuation. So Google looking very, very good. Now moving on to Meta, up about 1.5%. Meta, all-time highs continue to be put in. We are still battling with that $400 psychological level. Short-term bulls, full control. Move still not topped out, similar to what you just saw. Never lost the hourly uptrend, right? So a little bit of a pullback here on Monday. Did the bears set Bears had a chance. Set the lower high. Did they get the lower low, flushing these lows? No. So the bulls were able to reverse. New hourly uptrend back to the bulls. So your daily move just continues higher at this point. Daily uptrend confirmed as soon as this move tops out. Looking for a higher low, anything above 359.35. Just looking for a higher low for further trend continuation at this point. First area of support, 374.31, right in line with your 12 EMA right there. Everything looking healthy, no red flags. Meta, beautiful weekly uptrend as well. As soon as this daily move tops out, let's say we come into a daily downtrend, earnings are bad next Thursday or something like that. It'll just be a weekly pullback. Meta with tons of space above your weekly higher low, guys. Weekly higher low, 340.77. So Meta with a lot of room, right? They could pull back 8% and still just be looking for a higher low based off of previous resistance, which will now be support right here. Very nice area for a pullback for further trend continuation, and monthly breakout is just beautiful for Meta at this point. Not expecting bad earnings from them, however, but you never know. They can go either way. So we're going to prepare either way. Now, Microsoft continued to push new all-time highs today, 405.63. They finally broke above the $400 mark for the first time in the history of the company, looking very, very healthy, guys, right? So daily uptrend simply continues at this point, right? So we never lost the hourly uptrend. You can see same thing on Microsoft, double bottom and then recapture to the bulls. So as long as you don't lose the hourly uptrend, here they lost it. They set the daily higher lows. That's this candle right here. Right? Daily higher low. And now this is all one move. Never lost hourly. That's how you know. So now any move lower, just going to be for a higher low, anything above 385, looking for that higher low. And that 385 level is going to be big, right? It's previous 52-week highs, right? Previous 52-week highs right there. That should be acting as some very, very good support if ever Microsoft has a bad earnings next Tuesday, which I'm definitely not expecting from Microsoft. They usually outperform. So looking very healthy. Tons and tons of space on the daily for the higher low, and even on the weekly looking gorgeous after this tightening range breakout right now. Weekly uptrend confirmed. Tons of space on the weekly for any pullback, guys. Anything above 366, weekly higher low for trend continuation. Monthly looking absolutely gorgeous on Microsoft. Microsoft should have a very good 2024. But then again, when does Microsoft not have a good year unless we're going through an entire macro cycle tumble like the early 2022? But everything has been fantastic for the company over the last year and a bit. Now moving on to Netflix. Netflix after earnings yesterday, they got really high today, guys. They got about almost 15%, right? 14.21% to the upside before pulling back, but a little bit of a pullback could be notable for the company, should be warranted a little bit, right? We were very overbought on our short-term time frame. So now daily pullback is slightly underway here, but bulls never really losing the hourly uptrend, right? So hourly uptrend into pre-market, still not a loss. We'll see, can they continue that into tomorrow? If ever we lose the hourly uptrend and go into an hourly downtrend, just means that daily consolidation after earnings is now underway. Bulls, tons of space, daily uptrend confirmed. Anything now above 475.38, any pullback, looking for a daily higher low for further trend continuation. And I don't believe that will come down all the way to here, guys, which is your previous support, the $500 level, right? That'll be a hefty drop for Netflix, talking about an 8% drop. And without much negative news from the company or really negative news maybe from the rest of tech or Jerome Powell, I don't really believe that the stock could fall that much. So at this point, guys, everything looking very healthy on Netflix. Weekly trend breakout to the upside as well. Tons of space above 463, your most recent higher low. And on the monthly, guys, monthly breakout is looking beautiful on Netflix. So now targets to the upside, guys. Now we have to be targeting pretty much your previous area right here, 561. We almost got up to it today. You can see how big of a chop zone this entire area was back in about 2020, right? I know it's a very wide range, but you can see this is what we're struggling with. You can see this is the bottom where earnings left off from yesterday. And you can see where they're slightly topping out, 571. As soon as we get through this area, guys, it's all the way to all-time highs, but could be a little bit choppy in this area for investors currently. So that's pretty much everything on Netflix. I love how the company is doing. Love their outlook for 2024 as well. In terms of Netflix, for me, guys, I really like the company better down to 453 to about 450 down to about 425. But we'll see, right? All I'm looking for is daily higher low. If we can come back and maybe revisit this 500. If we do get that big drop, I will be looking to maybe take some positions 500, 490-ish. So we'll take a look at that if it happens. Now, NVIDIA, oh my God, guys. NVIDIA hitting $630 almost today. Beautiful rally by NVIDIA. This is all one move. They've never lost the hourly uptrend this entire time. So as long as they don't lose that, guys, well, NVIDIA just continues its rise. Daily RSI now getting to its top areas. You can see this is where it hit after last earnings, the first earnings where NVIDIA really exploded back here into the $400 range. You can see they were due for a little pullback, but only went sideways. This is when we got this overbought back in most recent history. And prior to that, it had to be about 2021 and even 2021 when we got this high on the daily RSI. You guys saw what happens. It just consolidated sideways for a little bit. Yes, it did gain a further 10% after that, but still maybe a bit of sideways action coming for us in NVIDIA stock, but looking fairly good. Bulls with tons of space, guys, so much space. Anything above 473, just looking for a daily higher low for further trend continuation. Maybe just going to be a little bit of sideways action until pretty much earnings in February, as that catalyst is still a little bit away. Weekly still looking gorgeous after this weekly breakout. After this weekly breakout of your tightening range, otherwise known as the bull flag on the weekly, right? Very nice weekly uptrend as well. So tons of space, anything above 474, looking for a weekly higher low. May just have to tighten up for a couple of weeks here before our earnings in about a month's time. But everything looking good on NVIDIA. Now let's move down to Tesla. So guys, Tesla, right? What happened in the after hours? You'll see now, breaking of the $200 psychological level. So your daily downtrend simply just continues at this point, now trading at around 194. So we'll see. Earnings tomorrow. After earnings, the daily RSI will be absolutely crushed. Short-term 4-hour RSI is going to be crushed, and 1 hour should be absolutely crushed as well. So will Tesla be able to have a bounce? Well, guys, next two areas of support, we're at it right now. This was the previous low marked early in the year in October. So first line of defense is 195. You guys can see we're currently battling with that level right now, the 195.50 level. If ever we break lower than that, guys, well, just zoom out a little bit. You'll see that your next big area of support is coming towards the 180. Right down here, the bottom of your downtrending channel, and roughly your roughly about 170 level. So that $10 range right here is going to be your next big area of support for the stock, in my opinion. It also coincides with the bottom end of this downtrending channel, and also, you know, things would be severely oversold down there on the daily if we get down there in one single push like this. So I'm expecting a little bit of choppiness, but one thing's for sure, guys, this daily move down is not done until Tesla recaptures the hourly. Where is the hourly uptrend this entire time? There is none. That's why it's just been a straight waterfall drop for Tesla right now. So hopefully now that the earnings catalyst is passed, we're going to get maybe a few analyst downgrades, which could take us a bit lower. The sweet spot zone for me currently, right? I know it was down to about $200. Anything under $200 is really good. But with the most recent negativity in the stock and whatnot, this is going to be my back up the truck zone. If we can get to 180 all the way down to about 150, guys, this is where I'm really going to start to play, and you'll see it on the channel. I will start playing Tesla very, very aggressively in terms of that. Weekly downtrend at this point, guys, is almost inevitable. So even if we get a little bit of a bounce, right, loss of the weekly uptrend, weekly downswing is in motion. Downtrend would only be with a lower high and lower low. So we'll see if that happens over the course of the next month or so. But one thing's for sure, if we do continue this negative price action into these levels, I will definitely be looking, guys. 180 down to about 150 is really, really, really juicy for a buying opportunity, not only for the long term, but maybe even for a short-term relief of a little bit of a swing trade here. So short-term negative for Tesla, but prices getting more and more attractive. Interest rates, guys, are going to be the name of the game for this company. Now, our two last ones, Palantir and PayPal. So Palantir coming down ever so slightly on the day here today. Well, not ever so slightly, 3.35%, really challenging our support zone. So from top to bottom on the day here, guys, today, almost down 5%. So hefty little sell-off. What we were looking for, it was a daily uptrend on Palantir, looking for the daily higher low. Anything above 16, just going to be looking for a daily higher low for daily uptrend resumption. But can they protect that? That is what we're going to be looking at, guys. If they can't, well, this will just be a weekly lower high. It got very close to 1859, right? We got up to about 1830. So engulfing move on the weekly. Now, can they protect the lows on the weekly? If ever we lose this daily uptrend right here, they have to protect the lows on the weekly 1577 if you want to have a chance at resetting a weekly uptrend down the line. Palantir not looking the best right now, not going to lie. They do have earnings in pretty much 2 Mondays time, so we'll see what plays out with that. But in my opinion, guys, you really won't get a break of this entire range. We're talking about the higher 1850 mark. Even a break to the downside, 1560 would be very it wouldn't, in my opinion, guys, we're not gonna get a break of those two levels much before earnings. It would be very unlikely was the word I was looking for. So just keep an eye out that on Palantir here. Obviously, if we get higher into these levels, guys, we're just going to be looking for monthly trend continuation at this point, with the monthly higher low being sought after right now. And if we break down lower, guys, well, we're just looking for the tightening up of this monthly range, 15 all the way down to about $14 should be a very juicy area of support. Now, lastly, our PayPal stock. Well, PayPal has been very, very volatile leading up into Investor Day. Tomorrow, very big day for PayPal, guys. Investor presentation day by the CEO. We will see what he has cooked up for us for the stock, but very big negative day once again on PayPal, down from the high of the day this morning to low of the day, almost 5% to the downside. So we are still just looking for our daily higher low on PayPal stock after such a nice rally after the bullish news by the CEO that he had great things coming for us and that we're going to see them tomorrow. Well, we need to set the daily higher low at this point, right? Anything above 56.50, looking for a daily higher low. I was saying in yesterday's video, this whole area right here, $63, $62, going to be a juicy area. Previous resistance should be acting as current support. 12 EMA is right there as well. So this whole area right here, resistance, right? Now, the company is going to be trying to use this as support as well. So just keep a very big eye on PayPal stock tomorrow. I think it's going to be make or break for the stock. We did break above this downtrending channel on the weekly, but not able to maintain those weekly gains above it. We'll see. Tomorrow's a big day. Tomorrow they could just recapture all of this, or if things are not as great as the CEO had planned for us, well, PayPal may just revisit the lower $60 mark. So tomorrow, big news event. And then obviously we have earnings coming up in 2 Wednesdays time. So going to be a very volatile next 2 weeks for PayPal. But if we can get this breakout cemented this week with continued movement to the upside after tomorrow with the stock, it's going to be looking very juicy for weekly continuation. At that point, guys, upside targets remain about $79 to the upside. That's your next closest area of resistance. And we will really break this downtrending channel nicely. So that's everything I had for you guys in terms of that. Now let's take a couple minutes and review my portfolio. So taking a look at my portfolio, guys, you will see that we did have a beautiful recovery on the portfolio this week, now standing about 3.5% down for the year-to-date period after having such a beautiful year last year, ending the year pretty much at about 75%. Well, you can't see 2023. You'll have to go to my ending December video for that, but it was about 75% for year-to-date gains. The start of this new year has been relatively turbulent as we've been exposed to a lot of stocks out of China and also a lot of interest rate sensitive stocks as well. They've just not played out that well to begin the year. So we are underperforming the index S&P up about 2% on the year so far in the last couple of weeks. And we are underperforming that by about 3.5% to the downside, but decent recovery. We've been farming a lot of premium this week, guys. Very happy with the amount of premium that we've generated this week so far. So yesterday had a little bit of a pop on CSIQ. So CSIQ had some bullish news. They got a $500 million investment from BlackRock, them and Sunrun. CSIQ got the investment as part of their energy deliverables segment, which means that they create solar farms and then they charge people for the power that they are using from those solar farms. So they're also an electricity provider, and BlackRock provided them with $500 million of investment for that specific division. So we had a nice little pop on the stock here, back up. Yesterday at one point was up almost 20%, and in the day about 15% to the upside. But today, a little bit of a pullback day. So I decided to write some covered calls. I was not fairly greedy with my covered calls, but I did write the $25 calls for this Friday for 60 cents. Now this is very good. This is over about almost 2.5% on these calls right here that we wrote yesterday. And you can see that from the 60-cent average, since we dropped a bit today, they're down to about 25 cents. I want to just lower my premium further and further. My total break even for CSIQ now, after being assigned at $35, cost averaging some shares at 25 earlier on in the year, and collecting a lot of premium on covered calls that we've been writing this entire time, our break even is now down to 26.48 after this most recent round of calls. I don't really expect CSIQ until interest rates start coming down here, guys, or until the Fed gives some more dovish comments on them next week. I really don't expect CSIQ to go on a tear towards the high $28, even $38, $30 range. So I am just looking to reduce premium and playing this range right here. Every time we get up to about $24, $25, I think that's kind of the short-term peak that the stock will be able to maintain. Maybe it's going to maintain a range between 25 and roughly 20. So every time it gets up here, guys, I want to be writing some calls. And the reason I wrote them yesterday is because after such a significant move, we could get some follow through, but I knew that since it's not interest rate specific news, since it's only one-time event company news, that the market would potentially sell this into the next day if we don't get some reversal on interest rate news here, guys, which is the one thing. If you really want to see an extended recovery on solar, it's going to have to come from interest rates. This one-day company specific news is not going to be enough to really start a tremendous rally on the stock. So after seeing the hourly downtrend on the day today, it means that most likely, unfortunately, our daily move after that one day of news is likely topped out. We will be looking for a daily higher low. So tomorrow I may even close these calls and maybe open the 25s or even the 24s for next week. I want to take advantage of the volatility in the stock now, because I do expect us to continue to trend lower even into next week's meeting, guys. If Jerome Powell is fairly hawkish and says no rate cuts, rates higher for longer, no rate cuts in March, potentially only in May, well, this stock is not going to receive that too nicely. So I want to make the most of the time with the volatility in the stock now. Now moving on to Palantir, you can see we wrote the $18 calls early in the week. They are pretty much almost worthless as Palantir is back in the $16 range, but it's allowed us to diminish our average cost on Palantir on those 200 shares. Average cost now sitting at about $17.32, so not too high off the current share price. We'll continue to write covered calls on those. PayPal, 66 calls leading up into the investor event. We'll see what happens with that, but I was very happy, got almost 2% on the week for the 66 covered calls. PayPal back in the $63 range. So these covered calls are now in profit. We'll see how they end up tomorrow, but if we do rise tomorrow off of the news, off of this high volatility, right? If we get back into 66, 67, I may be able to roll those into next week and get even more premium. Still looking to diminish my average cost on PayPal, which currently sits around $64.60 on these 200 shares lower in the account. Now moving on to Baba. Baba, the $79 call that we wrote the other day is also pretty much, coming off half. We wrote this Baba after yesterday's news of Jack Ma buying $50 million in shares, and also the Chinese government stepping in and potentially backstopping the stock market declines with about $280 billion of offshore money. You can see that we wrote the $79 calls. Why the 79s? Because after an 8% move yesterday, I was not expecting Baba to potentially put in another 7% in the remaining part of the trading week. So we wrote the $79 calls. It was just around our break-even price. So I wasn't expecting that. It was kind of just farming premium here. So I was happy with the premium we got, 31 cents. And now Baba, as a matter of fact, we also closed another Baba position down here. We had the 66 puts that we wrote on Monday. And you can see we closed them out here. We wrote them for 43 cents. We closed them out for a penny on the day here today. You can see that right here. Closed them out for 1 penny. So pocketing all of that premium. And now our break even on Baba is down to about $79.11 after being assigned at 82. So I like this. Even our most recent leap play that we played, the $50 leap calls for next January, those are up significantly here, almost up $600 on those. Very decent gains, almost 25% in the last couple of days. Really did a good job of picking the bottom of Baba before that news. Didn't know the news was coming, just liked the price, liked the bottoming process that the stock was in. So that's pretty much everything for Baba. Now, the Oxys, the Oxy 56 that we wrote at a very juicy support level, right? So that is also ending fairly worthless, or trending towards worthless. We wrote the $56 puts, very juicy long-term support. So those are now coming pretty much worthless, only trading about 5 cents. We wrote them for 27. We took an earnings play on Tesla, right? The expected move on Tesla was about 6-7%. So we went 2 standard deviations from that. We went for the 175s, which gave us 53 cents in premium. Tesla trading right now 195. I would be very surprised if they get all the way down to 175 by Friday, but that is what we wrote. We're going to pocket this 53 cents. So very nice play here on Tesla, very risk averse play, not very risky at all. And if ever we get to 175, that's my buy target. As I was saying earlier in the video, guys, I like Tesla, right? This lower 175, 180, 175 area, right in my sweet spot. So staying true to my strategy. Trade Desk, we actually did a little bit of a maneuver here on Trade Desk. So Trade Desk, you will see here that we were quickly approaching a slight area of resistance. You had our weekly moving averages up here, right around my assignment price, $71, $72. And what happened today after such a significant move to the upside? Daily engulfing move, looking for the daily higher low. How do you know your daily move is topped out? Look at the hourly time frame, loss of the hourly time frame. So Earlier in the week, we had these 72 calls for 42 cents. Now, when I saw today that we lost the hourly timeframes and that the markets as a whole are getting a little bit toppish, maybe due for a little bit of a pullback, well, this pullback I'm going to ride. If we get back into the 669, 68s, this should fare fairly well. So I rolled them down one strike and 1 week out. So we went from the 72s for this Friday to the 70s for next Friday. And what do we get? We got $1.90 in premium. So the total credit across these two things, we got 42 cents earlier on the week. And with the roll, I know it says 190 here, but the positions are right here. So you can see we wrote them for early in the week for 43 cents. So we got 43 cents, bought them back for 25 cents, and then wrote the 190s. Total net credit, 172. So it's been a very good week on Trade Desk, collecting almost $2.50 in premium. Our average cost is now down to $68.71. So if we do pull back lower here, I expect the premium out of these $70 calls to come out of them fairly quickly. So I'm just looking to play a little bit of a retrace down on Trade Desk, just lowering my average cost, managing the position. Adobe and Oracle, we sold out of those. Those were swing trades after those companies' earnings. I've been telling you guys I wanted to get out of them for a while, just freeing up some buying power. Decent gains on them as a whole, guys. Adobe, I got them at $5.85, sold them at $6.08 today, I think, $6.08 something. Take a look here, $6.0830 was the fill, and Oracle sold about $114.64. Oracle average cost was about $105. So fairly happy getting out of those two positions. Little swing trades. They took a bit longer than expected, but played them exactly where I wanted to. Adobe, we got them after earnings, and we were looking to play the gap fill. The gap fill we just got over the past couple of days. So that's why it's time to take a little bit of a profit on Adobe stock. And Oracle was looking for the gap fill play as well. Oracle, pulled the trigger a little bit early in the after hours on the day of earnings, got them around 107 with a bit of put premium that we wrote thereafter and some dividends that we collected. Our average cost was about 105.80 on 50 shares. And the gap fill was right here. We hit that today. So took some profit on that stock as well. Very decent increase. Took a little bit longer than expected, but happy to be out of those swing trades. And the rest we just maintained, guys. Still have my shares of Amazon, still in the 20-year bonds, still have some Ethereum and Bitcoin, a little bit of Nike, not high enough for covered calls. Starbucks, not high enough for covered calls. Trade Desk, just went over that. Baba went over that as well. Palantir and PayPal as well. CSIQ2 and my banking shares, guys. Banking shares still in the profit here. So going to be looking for this position to really rally hard in the second half of the year with those interest rate declines. So that's everything I had for you guys today. Hope you enjoyed the video. If you did, consider dropping a like. Consider subscribing to the channel if you're new as well. And as always, guys, if you have any questions, TA, stocks, options, or macro, leave it down below in the comments and I'll be happy to answer. Take care. Hope you guys are doing well. See you tomorrow after the close, and peace.